After some time off, we're back with Mining Minutes wrap-up, focusing in on South Africa and the labor disputes coming up. As usual, before we get going, we'll start you off with this week's movers and shakers. Lots coming out of South Africa as of Wednesday involving possible strikes in the mining industry. Centered around wage hikes and verbal sparring sessions between South African unions and government, the mining industry has been on the cusp of another full-blown workers' strike. Labor unrest is already rampant in South Africa in the motor and aeronautical industries, with Bloomberg citing the number of striking workers as high as 335,000. The timing for this latest round of wage demands is a little strange, even with gold's current rebound, with companies pushing cost-cutting measures harder than ever in years. Coupled with that, South African miners are continually dealing with a government that is looking to bring in mining law changes. That same government does seem to be siding with miners regarding the potential labor strike. We spoke with CEO of Anglo-American Mark Cutifani briefly at the World Mining Congress in Montreal a few weeks ago. He was pretty tight-lipped about the labor situation. He said that dialogue remained open, which was possible for the industry, but didn't get into details. A positive to take from this latest round of labor talks is that they seem to be remaining docile and non-violent. Sticking with wage issues, Freeport-McMoran's Indonesian unit is having issues with its workers after the latter refused a pay offer that was deemed too low. This involves workers at the company's Grasberg mine in Indonesia, where there was a fatal tunnel collapse in mid-May that killed 28 people. If a deal isn't brokered in the next month or so, it could lead to a strike at the world's second largest copper mine. Grasberg was slated to produce 500,000 tons of copper and 1.25 million ounces of gold before the accident in May. They now expect to produce about 80% of that. Barrick Gold Corp wasn't lying when they said they would be looking to offload some high-cost mines during their second quarter conference call. The gold giant sold 3 of its high-cost mines in Western Australia to Goldfields Limited for about $300 million. The company posted an $8.7 billion write-down on its assets in the second quarter and warned these types of sales would be on the horizon. Part of that write-down was the $5.5 billion impairment charge on Pascua-Lama, which the company recently admitted a mea culpa with violations, mainly involving the water management system. We'll end on a positive note as Canadian-based company working in Spain came up with a solution that was outside the box thinking to check soil contamination. Astur Gold Corp used 80,000 honeybees. Actually, they used pollen and nectar of their colonies to determine the levels of heavy metals in soils at the Salave project in Spain, reported by Mining.com. Apparently it costs less than $500, which works well in this period of cost-cutting and innovation all over the industry. And that'll do it for this week's edition of Mining Minutes Wrap-Up. If you have any questions or comments, please don't hesitate to send them to newsfeedback@kitco.com or on Twitter to me at Alex_Letourneau. Have a good one.